Thank you, Mr. Chairman. Mr. Chairman, I want to thank you for calling the hearing. There's a lot of controversy about the financial services industry and what happened after the meltdown. And to some extent, I sense that the concern that's expressed by the calling of this hearing is one of excessive regulation. That's a legitimate concern. We need regulation. I happen to think that the failure to have regulation caused a lot of harm. But if we have too much regulation, that can get in the way of, like what Mr. Mann was saying, the facility of consumer banks, or pardon me, our small banks, that can be collateral damage from some of the regulatory provisions in Dodd-Frank that were intended for the large banks when in Ohio and in Vermont, our small banks were doing the job and not causing the problem. Yep. But, Mr. Chairman, I just want to remind members, because I think this should put your mind at ease. Mr. Cordray comes from Ohio. He's got Republicans and Democrats who were getting hammered. He saved over $2 billion for consumers in Ohio, and the folks who were on the saving end of that didn't look at that as a Republican or Democratic deal. They just had a voice in the regulatory process that was going to, an attorney general and a treasurer who was going to do the job for them. And I also noted in Mr. Cordray's history that he got an award from the Better Business Bureau. A lot of the small businesses who had access to the process felt that they had a place that they could go to get fair consideration for the concerns that they have. Also, what I've heard in the testimony that Mr. Cordray has provided is that one of his concerns will be whether the regulations are working. It's not as though every regulation is a good regulation. Too much regulation gets in the way. And I want to give you a chance, Mr. Cordray, just to address that particular concern, which I think is a concern that many of my Republican colleagues understandably and legitimately have.
Thank you, Congressman. I appreciate the kind words. In terms of regulations actually working, we're in a good place on this issue, and maybe a unique place, because we're a brand new agency that just came into existence. We don't have any vested interest in what's been done before, and yet we have now inherited just a forest of regulations from other agencies. And one of the first things that we have determined that we need to do and want to do is we published a notice in the Federal Register to say that we are interested in considering how we can streamline our inherited regulations. Where can we reduce the burden without sacrificing anything in terms of consumer welfare? And the reason this is important is you have a lot of rules that are developed from time to time, and they kind of add up over time. But with each new rule, it's well-intentioned, there's a purpose you're trying to serve, but there isn't often a consideration of, when you put this against the entire mass of rules, is it too much?
Okay, so would it be fair to say, in your view, simple and clear beats complex and confusing?
Every day of the week.
All right,
yes.
Mr. Chairman, you heard it here. Also, we need to have the opportunity for small businesses, for kids with student loans, for folks who are trying to hang on to their house, to have some place they can go to get an answer. You know, there's some Vermont situations. A woman called her son's student loans with the Department of Education in Sallie Mae. She's trying to get an answer, hasn't gotten one for 30 days. They make $44,000 a year, and she's the sole provider for 3 sons, and she has no place to go. Another situation, this is again a Vermont situation. A dad called our office about his son who was in a bad car accident, unable to return to school full time. After the accident, he received a bill from the bank demanding payments on the loans immediately after graduating, and then claiming that the grace period that you get is the recovery period that he had while he was in the hospital. Another one, Bridget, 29 years old, significant student loans with Sallie Mae in the American Education loans, $176,000. She's been making her payments, $7,000 in interest in a year, but she can't get by. Sallie Mae has not been willing to discuss negotiating any kind of payment. Under the Consumer Protection Finance Agency, would these Vermonters be able to call your office and at least get a yes or no answer on what they could do and some help through the process?
Let me say generally, we've all heard the horror stories about mortgage servicing, and I know you hear from the same people we do. There is a growing problem in the student loan servicing realm as well. It's of concern to us. We're aware of it. We are taking consumer complaints on our website thus far about credit card products and mortgage products. We're going to expand to other products soon, and student loans will be one of those. In the meantime, we're working on trying to simplify and clarify, as you said earlier, simple and clear is better, the student loan shopping worksheet that we've worked on with the Department of Education to try to make things easier for students and their families to understand what choices they're making. So it's an area that's of growing importance. We know how tuition has grown, and the burdens on people have multiplied, and then they're stuck with these other problems that occur. So,
thank you. I yield back.
I thank my colleague. And to state for the record, the hearing is entitled, "How Will the CFPB Function Under Richard Cordray?" The